John OG here. And folks, I'm going to need everyone to sit down for this one. Before we get into it, make sure you're following me on X @ that's where I drop real-time updates when the market moves. And if you're watching on YouTube, smash that subscribe button. We're building something here. Drop a comment right now. Tell me where you're watching from. I see you, London. I see you, Sydney. I see you, Dubai. Let me know where you're tuning in from. Now let me ask you a question. Did you see what happened on Monday? Did you see what gold did? Did you see what silver did? Gold didn't just hit an all-time high. Gold didn't just break a record. Gold absolutely exploded past $5,000 for the first time in history. We hit $5,110.50. Let that sink in. $5,000 per ounce. And silver, don't even get me started on silver. Silver hit $117.75, the first triple-digit silver price in the entire history of modern markets. We blew past the Hunt brothers, we blew past 2011, we're in uncharted territory. But here's the thing, and this is what keeps me up at night. Most people have no idea what's actually happening. They see the price, they don't see why. They don't see the plumbing, they don't see what's happening behind the scenes. That's what we're going to break down today. Every single detail, the numbers that matter. The connections they don't want you to make. Let's dive in. All right, let's get into the numbers. And I mean the real numbers. Gold right now, we're trading at $5,080 to $5,136 per ounce. Just 2 days ago, we touched that all-time high of $5,110.50. We've pulled back slightly, but we're holding above $5,000. This is UP over 18% just in 2026 so far. We're not even through January yet. 18%. But here's the context that matters. In 2025, gold rose 64 to 67%, depending on which data you use. That was the best year for gold since 1979. You know what happened in 1979? Inflation was raging. The dollar was in crisis. People were lining up to buy gold. Sound familiar? Silver. Current price is $111 to $115 per ounce. The all-time high we just set was $117.75. Silver is up 55% just in January. In 2025, silver rose 146 to 147%. 147%. That's not a typo. That's nearly a triple on your money in 1 year. Now let's talk about the dollar, because this is where it gets really interesting. The dollar index, the DXY, just fell to 95.96. That's the lowest since February 2022. We're down 1.89% in just the last 4 weeks, down 10.83% over the last 12 months. And you know what Trump said? He said he's not concerned about the dollar's decline. He said it hasn't fallen too much. Think about that. The President of the United States is comfortable with a weaker dollar. What does that tell you about where we're heading? Now here's the relationship you need to understand. When the dollar falls, gold and silver rise. It's not a coincidence. It's not magic. It's math. Gold is priced in dollars. When dollars become worth less, and I mean LESS, not worthless, not yet anyway, when dollars become worth less, it takes more of them to buy the same ounce of gold. Simple, but powerful. The gold to silver ratio is now sitting at approximately 46 to 50 to 1. Back in April of 2025, this ratio was 100 to 1. We've compressed by nearly 50 points. What does that mean? Silver is massively outperforming gold. Historically, when the ratio drops below 50, silver is screaming at you. It's saying, I'm cheap relative to gold and I'm catching up fast. Okay, so those are the numbers. But here's what most people are missing. This isn't just about price going up. This is about a fundamental shift in how the world views money. Let me explain. Central banks, and I'm talking about the institutions that create money out of thin air, they are buying gold at a pace we haven't seen in decades. In November 2025 alone, central banks purchased a net 45 tons of gold. Year to date through November, they've accumulated 297 tons. Poland is the biggest buyer, 95 tons so far this year. Kazakhstan has 49 tons. And China, officially China has been buying for 14 consecutive months. But here's the thing about China, and this is what mainstream media doesn't tell you. Research from Yan Nieuwenhuis and others indicates that the People's Bank of China may be sitting on over 5,000 tons of gold. That's more than twice what they officially report. Connect the dots. Why would the world's central banks be hoarding gold if they believed in the dollar? Why would they be loading up on a barbarous relic if they thought paper money was the future? They know something. They've seen the numbers. They understand what $36 trillion in U.S. debt means. They understand what running trillion-dollar deficits every year means. J.P. Morgan is projecting 755 tons of central bank purchases in 2026. Goldman Sachs says 60 to 70 tons per month. 95% of central banks surveyed by the World Gold Council expect global gold reserves to increase over the next 12 months. This is de-dollarization happening in real time. And it's not just gold. The U.S. government just classified silver as a critical mineral and a national security issue. Why? Because silver isn't just a precious metal. Silver is an industrial metal. Solar panels need silver. Electric vehicles need silver. AI data centers need silver. Medical equipment needs silver. The world is electrifying. The world is going digital. And the world is running out of silver. The silver market has been in a supply deficit for 6 consecutive years. More silver is being consumed than is being mined. The stockpiles are depleting. This is not speculation. This is math. Now let's look at the technicals. Because price action doesn't lie. Gold. The trend is strongly bullish. We're making higher highs and higher lows. That's the definition of an uptrend. Until that changes, until we start making lower highs and lower lows, there's no reason to fight this. The RSI, that's the Relative Strength Index, is sitting around 66 right now. Overbought territory starts at 70. We're getting close, but we're not there yet. And here's the thing. In strong trends, overbought can stay overbought for weeks. MACD is stable, positive territory, no divergence. Support levels to watch, $5,030 is immediate support. Below that, $4,160 to $4,165 is a key zone. If we lose that, $4,110 comes into play. The line in the sand, that's $4,000. As long as we hold above $4,000, the technical picture remains bullish. Resistance? Next major target is $5,200. If we clear that, we're looking at $5,500. And $6,000 is absolutely in play before this cycle ends. Silver. This is where it gets really interesting. We've completed a textbook cup and handle pattern. For those who don't know, this is one of the most bullish patterns in technical analysis. It signals a major breakout. We're also forming what's called an ascending broadening base. This is a pattern of higher highs and higher lows, but with expanding volatility. It shows strong momentum with increasing conviction. Support is at $83.90 to $95s. That's a wide range because silver is volatile. But as long as we hold above that zone, the trend is intact. Resistance is at $93.50 to $95. Once we clear that decisively, the next stop is $100. And Citigroup just raised their target to $150 by the second half of 2026. $150 silver. Think about that. All right, this is the section where things get really wild, and this is what I think is the most important development in the precious metals market right now. Pay attention. Shanghai is paying a massive premium over COMEX for physical silver. We're talking $10 to $20 per ounce above what the Western paper markets are quoting. Back in December, Shanghai was trading at $78.55 per ounce when COMEX was at $72.36. That's a $6 premium. But recently, reports show this premium has exploded to over 12%. Now, in a normal functioning market, this shouldn't happen. If silver is $10 cheaper in New York than Shanghai, traders should buy in New York, ship it to Shanghai, and pocket the difference. That's arbitrage. That's how markets are supposed to work. But here's the problem. There's not enough physical metal to move. The arbitrage isn't working because the silver isn't there. Let me give you a number that should terrify the paper shorts. In just 7 days, in early to mid-January 2026, 33.45 million ounces of silver were physically withdrawn from COMEX vaults. That's 26% of COMEX's registered inventory gone. In 1 week, COMEX registered silver inventories have plummeted over 70% since 2020. And here's the warning sign that tells you everything. The silver market is in backwardation. What does that mean? It means the spot price, the price for silver right now, is higher than the futures price, the price for silver in the future. In normal markets, futures trade higher than spot. That's called contango. But when spot is higher than futures, it's called backwardation, and it signals extreme physical demand. The market is saying, I want the metal now. I'll pay a premium for it. I don't want a contract. I don't want a promise. I want the bars. Traders are rolling their March contracts backward into January and February. They want delivery now, not later, now. China has also imposed export restrictions on silver. Roughly 35 million ounces are potentially offline. China controls up to 2/3 of global silver refining capacity. Let that sink in. 2/3. They're not just a consumer. They're the gatekeeper, and the gate is closing. Now let me be balanced here. Let me give you the other side. Because I'm not here to pump. I'm here to help you think. What could go wrong? 1. The Fed could stay hawkish. If inflation reaccelerates and the Fed refuses to cut rates or even raises them, that creates headwinds for gold and silver. Higher rates increase the opportunity cost of holding non-yielding assets. 2. The dollar could rebound. If geopolitical tensions ease, if the U.S. economy strengthens, if capital flows back into U.S. treasuries, the dollar could rally, and that would pressure metals. 3. A deflationary shock. If we get a severe recession, a credit event, a market crash, initially everything gets sold. In March 2020, gold and silver sold off hard before they rallied. A liquidity crisis could cause short-term pain. 4. Technical overbought conditions. The RSI is approaching 70. We've had a massive run. Pullbacks are normal. Pullbacks are healthy. If you're not prepared for a 10-15% correction, you shouldn't be in this market. 5. Government intervention. In 1980, COMEX changed the rules mid-game to stop the Hunt brothers. In 2026, the exchanges have already raised margin requirements. Desperate governments do desperate things. But here's the thing. Every single one of these risks is temporary or unlikely given the current setup. The Fed is stuck. They cut rates in 2025 and they're signaling more cuts ahead. The dollar is in a structural decline. $36 trillion in debt doesn't reverse overnight. A deflationary crash would lead to more money printing. Look at 2020. The Fed printed 40% of all dollars ever created. Pullbacks in a bull market are buying opportunities, not exit signals. And government intervention? They tried it in 1980. Silver still went from $6 to $50. The fundamentals eventually win. All right, let me give you your 3 key takeaways from today. Number 1, we are witnessing a historic move in precious metals. Gold broke $5,000 for the first time ever. Silver hit triple digits for the first time ever. This is not a normal market. This is a paradigm shift. Number 2, the physical market is separating from the paper market. Shanghai premiums, COMEX inventory drains, backwardation. The signals are screaming that real metal is scarce. Paper promises are one thing, physical bars are another. Number 3, central banks are accumulating gold at unprecedented levels while the dollar weakens to multi-year lows. They're not doing this by accident. They're preparing for what's coming. Now, I have to say this. Nothing in this video is financial advice. I'm not a financial advisor. I'm a guy with a camera who reads charts and reports. Do your own research. Understand your own risk tolerance. Make your own decisions. But if you ask me, I think the window is closing. I think we're still early in this move. I think the best days for gold and silver are ahead of us, not behind us. If you got value from this video, smash that subscribe button. Hit the bell so you don't miss the next update. Follow me on X for real-time alerts. The information is out there. The dots are there to connect. The only question is, will you act on it? Invest with logic, not hype. John Ogg out.